everyone. Joe DiChiara, CPA and lifelong entrepreneur, coming to you with episode number 8 of How to Win Big at Business. And in today's episode, because it is tax season, it's January, and I know people are starting to get anxious. The tax forms are starting to arrive, and tax season, especially for small business owners, is rife with confusion. What can I deduct? How do I make my quarterly payments? Maybe you're afraid of making costly mistakes, and maybe you're just overwhelmed with all of the different tools that you have at your fingertips. I mean, let's face it, when I started in accounting over 40 years ago, things were pretty simple. Business owners usually had one checkbook. Their accountant came to visit them monthly or quarterly, so they had to sit down face to face. And it alleviated all of that fear and anxiety. There wasn't QuickBooks. There wasn't, all kinds of gizmos and gadgets. Now you have AI on top of that. And by the way, don't trust AI because it gets things wrong all the time. I have methods to verify if the AI is correct. I actually use 3 or sometimes 4 different AIs when I'm doing tax research. But I'm here to tell you that there's good news. I'm going to help you get through this, avoid the overwhelm step by step over the next few weeks. I'm going to be covering specifically taxes for self-employed professionals. So let's go through some of the fundamentals. You need to have accurate books and records, not just for your taxes. And I talk about this all the time. You see, taxes, filing your taxes is actually a once a year transaction. And what it is, it's the culmination of everything you've done throughout the year. So if you've been listening to me, the solution to that is to keep accurate books and records on a daily basis. And how do you do that? By instituting good business practices, good habits. For instance, when you make a payment for something, make sure you have a backup document. Know your numbers, understand your balance sheet, understand your income state, so that when the time comes to actually file your taxes, there's no surprises. And when there's no surprises, there's limited or possibly no anxiety. You already know what the result is going to be. And it's not rocket science. It's not rocket science. The real problem is that small business owners and the people that I talk to, if you're following me, I hope that you're a self-employed professional, because that's who this podcast is targeting. So if you could relate to this, a self-employed professional, because I was a self-employed professional. And actually, I'm still a self-employed professional, only I have structure. And it didn't start that way, okay? Because I could feel your pain. I went through all of the pain and suffering. And I believe my job here on earth is to help you and other self-employed professionals avoid that pain and be on top of your business. So the first fundamental thing on your list is to make sure that you have an accurate set of books and records. Now, how can you, as a self-employed professional, know if you have accurate books and records? And let me let you in on a little secret. It has nothing to do with how you feel. You may feel like you had everything under control and everything's hunky dory and you're on top of everything. But the truth is, unless you have a proactive accountant looking over everything, you're going to be in the dark. You're going to be in quicksand. There's nothing worse than having a feeling of security that everything's fine, only to find out later that it wasn't. And the worst part of that, when you learn what you could have and should have done, how simple it is, you're going to be kicking yourself. But there's no value in that. There's no benefit to beating yourself up. So if you don't have a solid set of books and records, start now. You see, taxes are, like I said, filing a tax return is a once a year transaction. It's a once a year event. And once the year is over, pretty much any tax planning that you could have done is gone. There are some things you could still do, like for instance, contributing to an IRA or a SEP IRA if you're self-employed, and that's a good one. That's a good one. You don't even have to make the decision during the year, and you don't even have to lay out the money during the year. So that's one of my favorite tax benefits. And if you don't have a SEP IRA, let me tell you why you should have a SEP IRA. You could deduct up to 25% of your salary. So, two things going on here. Number one, you need to be on salary. In other words, you have to, and to be on salary, you need to have a corporation. Now, you could also do a pension plan if you're a Schedule C, but I don't deal with Schedule Cs, to be honest with you. So all of my clients are S Corp or C Corps becoming S Corps. And that's, that's over 40 years of experience working with thousands of small business owners. It's really a no-brainer, folks. Now, there are situations that call for other types of entities, but I'm not going to get into that now. So a SEP IRA is one of the best tax reduction vehicles out there. But let's get back to the steps that you can be taking now. So you still have time to find out if you're in a bad situation. Don't wait until you go to see your accountant. Now, and let me be clear on this. There's tax preparers and there are accountants. I am an accountant. A tax preparer is somebody you go to once a year. And if you're in business and you have a tax preparer, you really need to consider hiring an accountant. Now, you might say to yourself, but Joe, accountants are expensive and I can't find an accountant and I don't know how to find an accountant. Well, yeah, for the most part, accountants are expensive. Lawyers are expensive. Doctors are expensive. So why is that? It's because number one, they're in demand, and number two, they're valuable. A good accountant is going to more than save you money in taxes and reduction in pain and anxiety than whatever you're paying. And if they're not, if they can't show you in plain black and white on paper the amount of money that they're saving you, you need to start looking for another account. If you're smart enough, if you're lucky enough to have an accountant, you should have been meeting with that person all throughout the year. So this is the first step. Now, this is January already. So if you haven't done this, let me talk about what you can do going forward. So the first step is making sure you have a good set of books and records. The second step is to learn how to read your financial report. One of the biggest mistakes that self-employed people make is they don't spend time, they don't learn about the financial side of their business. They can be experts, and I hope you are, in whatever your business is. If you're an expert in crypto, great, you're probably busy. Nobody understands crypto, and you can make a fortune. But if you don't know how to read your financials, you'll be making a fortune, but you'll also be losing a fortune in unclaimed deductions, overpaying your taxes. Maybe you're not structured properly. So, in order to do this, you need to educate yourself. Every successful entrepreneur that I've ever met knew their numbers. It wasn't an option. So if you don't know your numbers, start learning them now. It's never too late. You know, you there's an old saying, and I'll probably, and I don't know how old it is, it might not be that old, but I'm gonna probably get it wrong. But the best time to plant a tree was probably 10 years ago, because now you would have a tree, right? The second best time to plant a tree is right now. So the best time to start learning your numbers and know your numbers and be on top of your numbers is when you first start your business. Now, if you haven't done that, the next best time is right now, okay? And don't just rely on your accountant telling you everything is fine. And I'll tell you what, a lot of accountants, especially tax preparers, are after the fact. They're not doing account. What they're doing is recording your history and then telling you, oh, yeah, you had a good year, when in fact, maybe you did. I make it a habit, and not all of my clients take me up on this, but I tell them, I offer them a quarterly review to go through their financials. That's for all of my clients. That's part of our service. And let me just say, if you want that kind of service, just book a chat with me. We're always looking for good clients. We don't take everyone, because I've learned, who to work with and who not to work with. So if you're a self-employed professional, and anything I've said in this podcast, or especially this episode, resonates with you, book a chat with me. Timewithjoe.com. I'll be more than happy to walk you through our system and do a discovery call. Maybe we won't be a good fit, but I can guarantee you this. I can guarantee you this. You're going to walk away with more knowledge. Okay, so let's just go through a couple of other things you can be doing. Besides your business, you're going to be getting personal documents that affect your tax return. So personal returns are pretty much all dependent on what we call third-party payers. In other words, your business, you're responsible for keeping your books and records. And like I said, you want to keep those books and records throughout the whole year. You don't want to wait until the end of the year, because then any real tax planning you could have done, the window is closed. Most people are what we call a cash basis taxpayer. That means that once the calendar hits December 31st at 11:59 p.m., if you haven't spent it, deposited it, or put it on a credit card already, your window of opportunity is over. For personal returns, it's a totally different story. You're going to be getting 1099s, 1098s, W-2 interest and dividend statements, which come in the form of a 1099. But pretty much 1099s, 1098 is the form that you get from your bank for mortgage interest. You have crypto transactions to report, which again, that can get a little bit scary if you don't know what you're doing. So make sure if you have crypto transactions that your accountant understands how to report them. Also, and just a side note, if you're a crypto miner, in other words, and you know if you are, you know that you are, there's special tax rules that apply to you. So let's get back to the third party forms that are going to be coming. Start accumulating them, put them in a file. Not only that, what I recommend is you save a digital copy in a Dropbox folder, a Google Drive, somewhere where you can access it. And also, a lot of those documents now aren't even mailed. So you got to be careful. You got to be cognizant of what you're expecting. For instance, a lot of states don't mail unemployment 1099s. It's a 1099-G. That's government pay. What they want you to do is log on to their system and download your 1099. Why? Because number one, they want to save the administrative paperwork. They want to save on the postage. And, they're the government, so they should be doing that. So it's your responsibility to go online, download the form, and and if you've been doing it to get your benefits, you know how to do it. You just got to know where to look. School interest payments, school and tuition payments. Again, student loan interest. They may not be sending you that. Thanks for your 1098 interest. They may not be mailing it. Again, it depends on the institution. So you're responsible for going online and accessing this info. Another big black hole is the Obama, the marketplace statements that you're supposed to get, because there's something called a premium tax credit. You're paying reduced medical insurance because it's being subsidized by the government. And at the end of the year, there's a recalculation. You see how much premium credit they give you depends on your income. And sometimes that's a moving target, especially if you have a business. So sometimes you get some money back if you've overpaid, and sometimes you have to pay. Well, in order to calculate it, you have to report. And that means you have to get a statement from your insurance company. If you know, and you'll know if you were on Obamacare, expect to get a form. And if you don't have the form, you can't file your tax return. I've had clients that tell me they don't have a form. And it turned out, they had to go online, go onto their insurance carrier, and lo and behold, the form is there. Now, what happens if you don't submit the form? The IRS is going to send you a nasty letter and probably a bill. That's what they do. They don't say, hey, you forgot to report this. Can you please fix it? No, they're going to calculate it on whatever methods they have, and they're going to send you a bill. That's a wake up call. You don't want them to send you a bill because now you got to fix. So that's my story. I'm sticking with it, folks. That's the end of this podcast. In podcast number 9, I'm going to go into some more about avoiding the pain and suffering of tax season. For a long time, since I started in accounting, accountants especially have been talking to the government, pleading with the government to ease what we call the work compression issue. And the problem, let me tell you what the problem is. I just got an email from the IRS. They will be ready to process individual tax returns starting January 26th. Okay. The deadline for businesses is March 15th. So think about that. That's only a little bit more than, what is that, 6.5 weeks to get business returns done. Now, the good thing is that for businesses, as long as you have your books in order, your accountant can actually prepare your tax return. In other words, have it all input in the tax software. And then when the IRS is ready to accept it, we can submit it. For individuals, here's the real April 15th is the deadline. So yeah, we get another 4 weeks. So you have 10 weeks, 2.5 months to get your tax return done. Well, the problem for a lot of people is they have to wait for the documents from those third party. And again, if you're missing a document, you're going to get a bill from the IRS. That's a big problem. There's no solution right now. The real solution is, listen, if you're not ready, we file an extension. The drawback to that is if you don't know if you owe money, the extension is technically invalid. You have to have a certain amount of money paid in. April 15th is not an extension. If you file an extension on April 15th, it's not an extension to pay your taxes. It's an extension to file your taxes. And people get very confused over that. And if you have to pay and you pay late, guess what? You're getting a bill from the IRS. So I went on long enough. That's my story. I'm sticking with it again. Joe DiChiara, God bless. If this is your first time listening to the podcast, follow me if you can, like the podcast, tell your friends about it because this is important information. And I do the podcast to get this information out there to, like I said, help self-employed professionals like. Thank you. God bless. And I'll see you in the next podcast.